Welcome to The Deep Dive. Today, we're peeling back the layers on Palantir Technologies. It's a name that's been pretty much impossible to ignore in the stock market, especially when we talk about, AI-powered software. We pulled together insights from a key article, Palantir's Soaring AI-Powered Growth, a stock market phenomenon, and, well, a whole stack of other data to really understand what's fueled this remarkable run. Our mission today. Let's unpack the incredible story behind Palantir's stock. It's been making headlines constantly, so if you're trying to keep up with the breakneck speed of tech and investments, this deep dive offers a real shortcut to understanding the core forces at play here. Okay, let's just jump right in. Did you know Palantir stock soared 80.3% just in the first half of 2025? It became the best performer in the S&P 500. That's the big benchmark index, right?
Exactly, and that context is crucial.
Yeah, I mean, to put that in perspective, the S&P 500 itself has only returned, 6.2%? And the NASDAQ, the tech-heavy one, returned 5.9% that same period. It's just such a stark difference, it really makes you ask, what on earth is going on here?
Well, what's fascinating, I think, is that this isn't exactly a new thing for Palantir. It actually came into 2025 with incredible momentum already. It was the best performing stock in the S&P 500 in 2024 as well.
The whole year. Wow.
The whole year, skyrocketing an incredible 341%.
341%.
Yep. That even outpaced, the superstar NVIDIA, which gained 171% last year, and compare that to the S&P 500's 25% gain in 2024.
Okay.
So this consistent, really explosive outperformance, it certainly makes you wonder, right? What's behind such growth?
Absolutely. So what does it all mean? The article we looked at points to strong demand for the company's AI-powered software platforms. For data analytics, that seems to be the core driver. But let's trace this journey, maybe starting with how 2025 kicked off. Palantir gained nearly 11% right at the start of 2025, even before its Q4 2024 report came out on February 3rd. Meanwhile, the S&P 500 was only up like 1.9% in that same little window.
A big difference early on.
Yeah. And the source also mentions that this early momentum likely got a bit of a boost from Donald Trump's election. Apparently, some influential people linked to Palantir were known to be strong supporters, so maybe some political tailwind there.
That's what the source suggests, yeah. A possible factor in that early bump. But connecting this to the bigger picture, the company's performance around its Q4 2024 earnings release on February 3rd really highlights the market's reaction more concretely. Shares just rocketed 24% on February 4th.
24% in one day.
One day. Because the quarter's revenue and earnings, and importantly, their 2025 guidance, were just significantly better than Wall Street expected.
Okay, so let's break that down. Here's where it gets really interesting, I think. In Q4, Palantir's revenue grew 36% year over year. That beat analysts' projection of 28%.
A solid beat on the top line.
And then adjusted earnings per share, the EPS, surged 75%.
75.
Which crushed the 36% consensus estimate Wall Street had.
Right, so almost double what analysts were expecting on the bottom line.
And what's more, the company's profits, they've actually been growing faster than its revenue.
Which points to that increasing profit margin. Always a good sign.
Definitely. But this raises an important question about investor sentiment, doesn't it?
It does. And a key aspect, I think, that really buoyed investors was the terrific revenue growth from the U.S. commercial business. That segment grew 64% year over year in Q4.
64%. That's huge.
It is. Because, many investors wanted to see greater diversification. They worried about the company relying too much on its governmental business.
Right, the government contracts versus commercial clients.
Exactly. So seeing that commercial side take off was a big deal. Just for context, in its most recently reported quarter, Q1 2025, Palantir's revenue breakdown was roughly 55% government, 45% commercial.
So getting closer to an even split.
Moving in that direction, yes.
And then looking ahead from that point, back in February, management guided for 2025 revenue growth of 31% year over year, which again topped the 26% growth Wall Street was projecting at the time. So another strong signal.
A very strong signal. Beat expectations, guided higher. That's usually a recipe for stock appreciation.
Usually. But, it wasn't all smooth sailing. Fast forward a bit. On May 6th, Palantir stock suddenly dropped 12.1%. That was right after its Q1 2025 report.
Ouch. Yeah, that would have felt sharp.
It did. But here's the twist. Within 1 week, shares had more than recouped that entire decline. And they actually closed out May with a gain. So what happened there?
Well, it's fascinating, right? The reason for that temporary dip, as the source explains, It's pretty safe to assume the main reason was just that the quarter's earnings only met Wall Street's consensus estimate.
Only met. So growth was good, but not better than expected this time.
Exactly. Earnings growth was great objectively, but just meeting expectations, well, that's often not enough to prevent a post-earnings sell-off for a stock with such a sky-high valuation.
Right. The bar gets set incredibly high.
Precisely. If you're priced for perfection, just being excellent sometimes isn't quite enough for the market in the short term.
Okay, that makes sense. But despite that dip, the underlying numbers in Q1 were still strong, weren't they?
Oh, absolutely. Revenue jumped 39% year over year. That actually exceeded Wall Street's expectation of 36% growth.
Okay, so the top line beat again.
Yep, and adjusted EPS surged 63%, which, as we said, was in line with the analyst consensus estimate. Met, didn't beat.
Got it. And just like the prior quarter, the company's profit increased much more than its revenue again.
Right, reflecting that expanding profit margin continuing its trend.
And there was more, wasn't there? Didn't management raise guidance again?
They did. That's the other key piece. Management actually raised its 2025 guidance for several key metrics, including revenue growth. They bumped that forecast up to 36% from the 31% they guided for back in February.
So even after only meeting earnings estimates, they felt confident enough to raise the full-year revenue outlook.
Correct. Which really highlights the market's sometimes complex, almost contradictory reaction to these quarterly reports, especially for these high-growth, high-valuation tech companies.
It really does. So Palantir stock then edged up about 3.5% in June, closing out that first half of 2025 with that impressive 80.3% total gain we started with.
Bringing us full circle. Quite the ride.
Definitely. So for you, the curious learner listening in, what's next for Palantir? The article points to an upcoming catalyst. The earnings release for the second quarter, that's likely coming up in early August.
Right. All eyes will be on that report. Management has already given some guidance for Q2. They're expecting revenue between $934 million and $938 million.
Okay.
Which translates to growth of about 38% year over year. Continued strong growth. They also guided for adjusted income from operations of $401 million to $405 million. That implies growth of 58% to 60% year over year. Again, faster than revenue.
And what's Wall Street thinking now if they adjusted their models?
They have. Wall Street is currently modeling for Q2 revenue slightly higher, actually, at $939.3 million. That's 39% growth year over year. And analysts are projecting adjusted EPS of $0.14, which would be 56% growth.
So the street is basically betting on another beat, even compared to management's guidance.
It seems that way. The expectation, based on Palantir's track record, is definitely that they'll continue to surpass Wall Street's estimates. That pressure is still on.
No kidding.
And if we just connect this to the bigger picture again, you've got a company with a current market cap around $317 billion and a gross margin of 80.01%. That's huge.
80% gross margin is software territory, for sure.
Absolutely. So Palantir's ability to consistently exceed expectations, especially I think in that commercial segment we talked about, that's really the crucial indicator for its continued trajectory.
It really feels like that commercial growth is the key narrative now.
I think so. It's about proving scalability beyond government work. So wrapping things up, we've taken a pretty deep dive into Palantir's extraordinary stock performance, from those explosive gains in 2024 right through to leading the S&P 500 in the first half of 2025. We've seen how its AI-powered data analytics platforms, its strong financial results, those increasing profit margins, how they're all fueling this growth, even while it's navigating these really high market expectations and working hard to diversify its revenue streams.
It's quite a story, and it raises, I think, an important question for you to consider. What does Palantir's unique journey, especially its ability to consistently beat expectations despite those sky-high valuations and those occasional dips, like in Q1, what does that tell us about the future of AI-driven companies in the stock market? Particularly, how crucial is that balance, the balance between lucrative, maybe more stable government contracts and achieving that robust, maybe faster-growing commercial expansion for long-term success in this new AI era? Something to think about.